All right, let's say you took a position, you took a trade, you got in the trade is actually going good. How do you move your stop loss so that in the event price starts going down, I can at least take some money off the table and put it in my pocket? I don't want to leave my stop loss where I entered the trade. If the trade is going good, I want to move my stop loss up. So we'll talk about how to do that. This is NVIDIA. NVIDIA makes semiconductors. Semiconductors are what they use to make chips, computer chips. Computer chips is taking over everything. If you can afford NVIDIA, buy some. But let's get back to this. So let's say you got into NVIDIA right there. Comes in here. For somehow, some way you managed to get in right there. Price comes up, pulls back, comes up again. You're looking real good now. How do you move your stop loss? NVIDIA is up like a whole $10 from when I bought in. So where do I move my stop loss to? In order to move your stop loss, you're going to do the same thing you did the first time. You identify your zone. Okay, I got my zone. You score the zone. Okay, I'm looking at it for strength. It's moving out greater than 2 to 1. It has 1 to 3 basing candles, so the time is good. The zone hasn't been penetrated, so it's fresh. It's currently on an uptrend. I'm such and such on the curve, so on and so forth. I get my entry. I look at the daily ATR. NVIDIA is killing it with 6.16. Their ATR is excellent, superior. So now you're basically just going to take that formula and you're going to do it again. But you're going to do it closer to current price. So look, here's a move out. It looks like it might be greater than 2 to 1. So now we're going to score this trade. And we're just going to basically do the same thing we did the first time. We're going to check the zone for strength. Did it move out greater than 2 to 1? It looks like it might have. Yep, greater than 2 to 1. I got 1 basing candle, 1 to 3 basing candles. I get 1 point for time. I get 2 for strength because it moved out greater than 2 to 1. Freshness, 2. Oh, for strength. It didn't quite break through a supply zone yet, though. This gap, and honestly, I don't believe I went over gaps. Basically, this gap, you're just going to pretend that this entire area is red. So you could basically literally just take this, and from here to where price opened, right here, because this candle is green, so we know that price opened here. Basically, this is just one long red candle. So strength isn't going to get 2 points. It's only going to get 1. Because even though it moved out greater than 2 to 1, it has not gone through an opposing supply zone. So that's 1 point. But that's all right. Because I'm just trying to figure out where I want to set my stop loss. So we'll just say that this is my zone. And I'm going to take the daily ATR. I won't go over that too much, but 6.16, multiply that by 0.02, otherwise 2%. And that's where I'm going to move my stop loss. 6.16 multiplied by 2%, Take that same number, subtract it from my distal line. Now I got my stop loss. So if the trade is going in my favor, that's how you would move your stop loss. You're basically just going to identify another demand zone, assuming you're going long, that's closer to current price. Identify your zone, calculate it out, calculate the daily ATR, subtract that from your distal line, and that's where you're going to move your stop loss. Hope to see you in the next video.